back to the Washington Outsider Report on the Coalition Radio. For those newly joining the program, my name is Irina Zuckerman and I'm the editor-in-chief of the Washington Outsider. With us today, we have a special guest, um, Denise Mejia. She's a crypto risk researcher and author who demystifies cryptocurrency for regular people. She's a financial services director at Potesta Solutions and works in IT security and compliance. Thank you so much for joining us today. Of course, the main topic of our conversation will be your upcoming book about crypto education for beginners, for introducing it to people like me who know about it mostly by reputation. But before we get into all of that, please tell us a little bit about yourself and how you got interested in this particular subject.
Absolutely. Thank you for having me. I'm very excited about this conversation. So, I work in the intersection of cybersecurity and cryptocurrency compliance. So, I help organizations understand and translate specific regulations and also assist with putting together risk frameworks to actually manage cryptocurrency risk. So as I'm working with some of my clients, due to some of the latest regulations globally that came out, I realized that there was opportunity to educate the general public on cryptocurrency risk. So for those folks that are not on fintech or in banking, um, when I'm talking to them, I realize that a lot of them have no idea how to even go about understanding cryptocurrency or how to trade, and they're terrified of the risk. So I made it a mission to actually start documenting some of my research. And I wrote a book, which is actually I'm very excited about. It's coming out in Q1, and it's titled Cryptocurrency Simplified, A Beginner's Guide. So it really walks the reader through the history of cryptocurrency, how the technology works, and more importantly, it gives real life scenarios highlighting risks of every aspect of blockchain technology as it relates to cryptocurrency. To couple that, I created a platform called Crypto Lens, which is focused on inclusive education and crypto innovation, mainly also highlighting specific risks around innovation and just cryptocurrency overall as it refers to the blockchain ecosystems.
Thank you so much for this introduction, and I personally am looking forward to reading your book, and I hope many others who are still mystified about the subject, and probably more so than even earlier on, do so as well. So I wanted to start with the basics, just to create a floor for the discussion. There'll be people of all backgrounds, financial, technological, listening to this, but many in the audience will not be familiar at all with what blockchain technology is, what cryptocurrency is, and what is the difference between the two. So if you could just give us a basic definition of the terms and a very basic description, that would be great.
Sure. So basically, cryptocurrency is built on peer-to-peer um, transactions of non cash or fade, so digital assets. So that's the basic concept, and that's what we call cryptocurrency. The first cryptocurrency or coin is Bitcoin, and that's where everything evolved. Now, the technology that powers cryptocurrency and cryptocurrency trading is more than just trading. That's the blockchain. It's really an ecosystem, a digital ledger of computers um, that um, and uses a number of platforms. Um, you probably heard of Ethereum.
Sure.
which actually, yeah, it powers smart contracts. So the whole concept of digital finance, that's where it lies. So basically, there are centralized and decentralized blockchains. And then blockchains are used to host all the components that makes up the basically crypto market for trading, if that makes sense.
Absolutely. I mean,
Mhm.
I know there's been a lot of controversy around Bitcoin, specifically about how many Bitcoins are left, whether, why it's not possible to produce more, and of course about the mysterious founder of or creator, and whether that's even a real person or some sort of combination of people hiding behind a fictitious name. What's all that about?
Yeah, so I explained that really well in my book. And it's really back in so it started with a concept in the 1980s and 90s. So um, how about we had a how about what if there was an actually decentralized financial system where there was no banking authority to control folks and we could just exchange currency? And the whole idea of cryptocurrency came about, and that's how Bitcoin was formed. Initially, when uh, it was it came to realization it was worth a fraction of a penny. And it was just a small project with a number of developers that worked on this. They developed a blockchain, and then, which is, like I mentioned, serve as the infrastructure for the Bitcoin transactions. And the first transaction was two pizza pies that they bought, and it cost probably what would be equivalent to $800,000 today for what they pay for that. So initially, there was a white paper that was published, and it was published by a pseudo-anonymous entity. We don't know exactly who it was. It was a group of people. Many people claimed they were the folks that actually wrote the white paper, but there hasn't been any evidence of anyone doing it at the moment. Um, so that's how everything started. And then obviously, Bitcoin, because the consensus mechanisms that it use, um, it is very it consumes a lot of energy. So it relies a lot of on electricity, which actually impacts the environment. So other coins, which are were created, many of them didn't make it. Currently, there is about 25,000 coins as of early this year. A lot of them don't make it, but um, one that actually was created to improve Bitcoin was Ethereum. And that's what's powering a lot of the cryptocurrency and decentralized finance that's currently happening today.
And do the other coins pretty much work the same way? Or
There are different coins and they have different purposes. So there are
Mhm.
different type of coins. Some of them are what we called stable coins, which are actually pegged to a currency, a fiat currency like the US dollar or the euro, for instance. So they're definitely more stable. Um, Currently, the issue with a lot of these digital assets is that they're heavily rely on speculation.
Mhm.
Um, and, if you want to keep it safe and you want to um, start investing, you can, let's say, invest in stable coins. They serve different purposes. It's important for beginners to understand the difference between a digital coin and a crypto asset because they have different purposes. Within the ecosystem for blockchain, you can have um, governance coins, which are used for voting on specific platforms, on rules that they create. And they're not necessarily traded or exchange. There are also coins that are used to send in currency from one, let's say, country to the other. For instance, I have a relative in Europe that I want to send money to, let's say, to Zurich, right?
Mm-hmm.
So um, I don't know if you heard about SRP, which is more um, uh, cryptocurrency by Ripple, and is used for cost effective and cross-border payments. So
Mm-hmm.
it's more efficient because, for instance, today in the US, we use the Swift payment systems. And if you have a
Mm-hmm.
relative, let's say, or a friend, and you want to send a payment, or you're doing business with either Japan, it's going to take a couple of days for you to send a wire transfer,
Mm-hmm.
and it has to be manually reviewed and approved.
Mm-hmm.
With blockchain technology, you can actually send a peer-to-peer transfer, and it will process in seconds, and it's less costly, so more cost effective because the rate translation with this particular currency. So there are many others. They call altcoins, alternate coins,
Mm-hmm.
that are used, and some of them I just warn the folks, my readers, and I actually put out a lot of sometimes articles about information to raise awareness when folks come to them and they are pricing a specific new coin. Oh, this is going to be bigger than, let's say, Bitcoin. Just to be aware, when people are hyping up coins and something seems too good to be true, it's usually a scam or it's not true. So people should really do the research. And There are specific sites and sources that they could use that I actually detail all of that in my book, to understand about these coins, the specific project, who's behind it,
Mm-hmm.
um, avoid scams, because there are a lot of scams going on right now. There are also a lot of cybersecurity hacks and issues, so they should really understand which exchanges. This change is really similar to an institution, like a financial institution, when it
Mm-hmm.
comes to cryptocurrency. So there are specific blockchains and platforms that support trading, and then there are exchanges. They're similar to banks if we
Mm-hmm.
compare them to the standard banking system. Um, there is a lot of social engineering and fake links being sent, impersonating exchanges. So, if anyone is interested in opening an account and learning more, that you make sure that they research the exchange accordingly, and they're
Mm-hmm.
actually understand the fees that go with the transaction and the processes.
Now,
That answer your question?
so my understanding is that the whole idea was to create very secure, anonymized, peer-to-peer exchanges between parties willing to make transaction and take it out of the whole idea of centralized financial institutions. So, what is the purpose of these exchanges? Doesn't it kind of defeat the original concept and create a whole host of, uh, headaches for everyone involved?
Yeah, so they provide the infrastructure really. So it's different because I mean, this is a very good question. But ultimately, if you were to translate that to a real life scenario. So, for instance, we do have banking organizations that we use, and obviously they have regulations they have to abide, and they review transactions with decentralized finance and blockchain. When we're doing transactions, that is different in the sense that you still need an infrastructure. It's kind of like going into your computer, but somebody needs to actually manage and make those cryptocurrency available to you, because, as I mentioned before, we have uh, centralized and decentralized exchanges. So it's really up to what the individual goals are when it comes to investing and trading. But you need an actual infrastructure, kind of like they're part of the whole ecosystem to basically um, hold the actual coins that you're going to be trading. And they also provide educational um, literature and training to individuals. They actually hold the cryptocurrency, and some of them are separate because they're the actual wallet companies, but they're connected to the wallet companies, and they actually serve it. So you couldn't just go online basically and make a transaction and identify someone. So they have to be a whole ecosystem behind it.
Hmm. It opens the door to a whole host of regulatory concerns regarding these exchanges, because as soon as you have these parties that claim to, these third-party intermediaries, the government starts poking around, sometimes for good reason, and sometimes because there's an opportunity to regulate, to intervene, and to kind of take the whole situation under control. But you know, I kind of want to ask a broader question. To what extent, while writing your book, did you encounter in misconceptions about cryptocurrency that you were trying to correct, and how do these concepts fit into that?
Yeah, it's a great question. So one of the biggest misconception about cryptocurrency um, is because of the actual um, foundation of cryptocurrency is pseudo anonymous, meaning that when somebody initiates a transaction, organizations track the wallet, but not necessarily the actual individual. So transactions are public and they're on the blockchain. So anyone with internet access, if they understand, they can go in and track all the transactions that happen in a particular blockchain. Um, this also raised a lot of concerns because um, money launderers and fraud organizations take advantage of that to actually watch money through the systems.
Mm,
Um, in terms of the risks associated with these transactions and the involvement from the regulations is quite interesting. So one misconception is that, oh, wow, this system is public. There is no there's no way for me to tell what's happening, what's going on. And that's actually not necessarily true because banking systems are more secret than blockchain. So that's one major misconception. Another misconception is that regulation is going to stop the innovation. Regulation actually, in a lot of cases, um, helps adoption and adoption of blockchain technology and cryptocurrency overall because they help set the rules and increase credibility. And if you see some of those other jurisdictions like Europe, Asia, the UK, they have less fragmented regulations and they focus more on the I mean, this is evolving and there's a lot of room, still immature. But if regulators are focusing more on the actual activities versus the actual digital access,
mm,
and they focus on regulating a specific projects and how they should be defined versus saying, okay, well, this cryptocurrency, should be regulated for this reason. And consumer protections, it really helps with adoption. So that's also another misconception that regulators, this is based on my experience and my research, actually, regulatory support helps. I feel that in the US, we're not necessarily there yet because is very fragmented. And because um, cryptocurrency and the market is global, there should be more collaboration with developers across borders, maybe academia and other institutions. So regulators should really understand what they're regulating really well before regulating it. So there's like kind of two sides of the coin.
Mhm.
But I think overall, if we focus on consumer protection and making sure the systems are secure, it's really an advantage for the market.
There's actually a valid concern because many of the regulators in the US, especially on the congressional side, consist of people who are not necessarily technologically adept or who are not familiar with these concepts, and for whom trying to regulate this is like waking through a swamp. How this disconnect creates a sort of disparity between what needs to happen and who is doing the regulating.
So
Is there any way
currently,
to
I'm sorry, go ahead.
is there any way to overcome this problem?
Yeah, no, that's a great point. And currently, um, some regulatory agencies. So there is collaboration. I'm aware of some collaboration between, for instance, EMEA, the European Union, and US regulators, like the OCC, the Security Exchange Commission.
Mhm,
Um, and they're also collaborating with global exchanges to better understand the ecosystem. Um, I just feel that we should shift more towards understanding, like I mentioned, the actual activities, right? And then what I find is that in some of the other jurisdictions where I go, they said, okay, well, we have a solution for regulating crypto assets. We're just going to take all of the asset classes for the traditional financial systems and fit each of the crypto categories there. But I almost feel like that's a good start, but there's way more than that because um, as I mentioned before, there's many different type of crypto products and asset classes, and they don't always, especially because of the ecosystem, they don't always match or align well with
mhm,
traditional financial systems. So I think we're making progress, but
mhm,
there is a lot of room for the right focus so that in, let's say, 5, 10 years, we're in the right place. Because I believe cryptocurrency could um, democratize,
mhm,
financial systems by helping um, and assisting with individuals in like less privileged communities where maybe the infrastructure for um, banking is not there. Um, but there is a lot of there is some specific considerations that need to be addressed from a risk perspective. For
mhm,
instance, um, if we see a lot of the speculators today and the people that are benefiting from cryptocurrency transactions, obviously they're more educated, they're early starters.
mhm,
Um, a lot of them, they're not people that are in less privileged communities because they can afford to lose some of that money, right?
mhm,
Some of the folks that are actually are average folks that are maybe lower income, that's why they're looking at this and they say, wow, this is super risky. I have no idea what this is. I can't afford to lose, let's say,
mhm,
$2,000. There's not just trading or sending payments when it comes to crypto. You can actually look at other investment opportunities because the fact that the way that it's designed, you can actually break down different investment products into portions.
mhm,
Um, so, for instance, if you wanted to buy a house or a building or invest, as an average person in a less privileged community, maybe not as educated in finance, it would seem nearly impossible, right? Especially in a third world country. However, now you can do that because of decentralized real estate, where they take, let's say, an actual building, right?
Mhm,
Um, and then they break it down into different shares um, um, of crypto units, and then folks can say, okay, well, I'm going to invest $500.
mhm,
And if I lose it, it won't be the end of the world. However, I would collect rent on the investment that I'm in, which is a building, which
mhm,
is being tokenized, right? So there are several investment opportunities that could open, doors for those individuals that are currently being ignored in communities. It's just the regulators are collaborators at this point, where they're working with some of these companies and development teams and academia. Um, but ultimately, they should take a stand where they say, okay, I'm going to have clear guidelines for protecting consumers and for making sure that these um, blockchain projects and infrastructure, as they come into place and they go live, they are actually in compliance with these guidelines that I'm going to publish and put out. And they should be aligning globally with other governments, not just, let's say for the US, because it wouldn't make a lot of sense. That opens up a lot of issues, right? When you don't know which regulation a specific smart contract needs to abide by, but then you're on the other side, and then you're dealing with another company on, let's say, in Asia. So
mhm.
those things to be taken into account.
On the business side, one of the things I've been hearing from a lot of people about cryptocurrency, oh, it's all hype. It's going to go away. On the other hand, you have, very sophisticated actors, digital bankers and others who believe that this is a genuinely um, real transformative technological innovation that is not going to go away. It may evolve in different forms, but it's going to be groundbreaking for the various industries. To what extent is it possible to separate the hype from the credible long-term elements of the crypto and blockchain ecosystem?
That's a great question. And that's really what the focus of risk managers, regulators should really be. And even I feel that these crypto companies, they should spend more time on educating people on risk management so they can actually increase the number of users that they get. So if we look at um, cryptocurrency, um, which is powered by blockchain, it's way more than just trading digital assets.
Mm-hmm.
Um, it's really looking at more affordable cross-border payments.
Mm-hmm.
It's really looking at protecting national security, um, tracking supply chain, protecting data and information, protecting and making healthcare data more accessible.
Mm-hmm.
It's really about making sure there's data integrity because of the nature of the blockchain. So the blockchain, as I mentioned, is a digital ledger of
Mm-hmm.
computers, but once information gets added in the form of blocks, you can change it. So basically, it's very difficult for um, someone to come in and try to change it. That's why it's now also being used to register land, basically, because when you have areas where there is natural disasters or um, there's disputes between owners of land, once everything something is on the blockchain, you could go back to the beginning of it and identified who this really belonged to before, so that there's lack of ambiguity. So in essence, blockchain is way more than just trading,
Mm-hmm.
right? So I think we need to make a distinction between um, cryptocurrency uh, market and trading and all the other different products out there that the technology can offer. And even if you're just an investor, there's so many different type of investments. So you can actually invest in you could actually lend money, for instance. You can buy a certain number of a specific cryptocurrency and you can lend it to a platform, so it will help them maintain liquidity, right?
Mm-hmm.
So that's a little less risky, but there's always risk. I think we need to really um there's a lot of potential, but a lot of um, serious risks. If we, with the help of regulators and industry leaders at large organizations, will focus more on um, mitigating this risk, then the potential is definitely there. I mean, people can make a lot of money with cryptocurrency. And the beauty of it is that you don't have to have a lot of money to invest. You can start with like $20, right? I'm not the one to usually give people guidance on investment and how to invest. I stay away from that. I don't have the expertise for that, but I can definitely guide people on the specific risks associated with it. And yes, given my research, there is a lot of potential there, but we're not there yet from a risk perspective because there's so many risks. I think the thing that frustrates me the most is that it's so speculative. So you can have, a person in the media, somebody holding a position of power, just, hyping up a meme coin, right? And then, wow, everybody decides to buy it.
Mm-hmm.
And then for the foundation of the project, maybe the developers, after, they make some money, they drop it, and then that's it.
Mm.
You lost all your money, right? So all of these things need to be properly researched. And then you could definitely play it safe, but you definitely need to do your research and stay informed. It's not easy.
So actually, I wanted to touch based on something very interesting you mentioned. Speaking of healthcare, um, earlier on, because not so long ago there was a big scandal in the United States and actually other places as well, but which had to do with this basically a major hack of the healthcare system, which ended up being extremely damaging. And part of the reason was because you had a lot of different pieces of the supply chain of healthcare information basically linked to each other in a way that made it extremely difficult to disentangle, and they were not properly secured, and there were all sorts of issues. To what extent after that scandal do you see um, these healthcare and insurance and billing providers switching or moving to blockchain technology to secure data, or is that something that's even that's likely to happen?
Yeah, so there's been a couple in recent years of serious security incidents involving a number of healthcare institutions, including those insurance companies. But if you look at their ecosystem, then it's not just them, right? Because each of these companies, they have vendors that they have to deal with.
Mm-hmm.
Um, there is the providers, there is the patients, everybody, there's portals, everybody has access to the data. So it's really tough to secure that data. And they do have regulations like HIPAA they have to abide by. There is specific assessments they have to conduct. But either way, I think that hackers are more sophisticated every day. And now with AI, it's like as much as we try to keep up protecting infrastructure, they coming out with more and more sophisticated attacks, right? However, to answer your question, when we're looking at blockchain, based on the case studies that have been conducted in some of the um, companies that are doing piloting this information, So it does a couple of things. Mainly, sec sec ensures that there is data integrity. That's the biggest advantage of blockchain because, like you mentioned, there's all this data. It's all over the place. It's in different schemas. It's in different environments, and then you have to make sense out of it, and it's not easy, right? So, um, because of the way the blockchain works, and there is a digital, footprint of each of the information. And then as he moves through the databases, you can see, the stages that it was in. It helps with preserving integrity, which is huge. Confidentiality is also a factor um, because of the way the blockchain is defined. It's hard to hack it. I know that it's hard for people to understand that we have all these issues with scams and cybersecurity within the
Mhm.
blockchain. But the technology itself, the way that it was defined, is difficult to hack it because once you update a block, it's that information, whether you do it via a consensus mechanism or another way um, within the healthcare system, you can't really um, you can't really change it without that block sending information or sharing and being every single copy of that block in that blockchain, whether it's going to need to be updated, right? So there is that footprint. So it's really tough to manipulate information to have access to the systems. And then more importantly, the access of information. So for instance, if I just got an MRI, right? So I had to go and get the MRI at one lab to bring it to my doctor and then make sure that I have that disk, like a floppy disk or like a CD with me. With blockchain, um, the actual individual would own. So there would be an ecosystem, right? Like Web3 type of environment. And I have a membership. I can access my information and I can give any single organization or doctor or hospital my records, and they don't have to maintain it. They don't have to keep it. They don't have to lose it. They just access it for a amount of time when they need it, right? So that makes it a lot easier for people to share information. Of course, blockchain has its disadvantages too, because you can't keep the data forever, and there are regulations around maintaining data for how long it needs to stay, and also scalability problems, right? Because if you're having looking at how many people live in a specific jurisdiction and how much access is needed from different health institutions. It's a lot of information, right? So are you going to keep it forever? So all of these questions are being discussed at the moment. But from a availability and security perspective, and also
Mhm.
making sure that the owner of the data have the access is definitely an advantage.
So definitely, at least the technology is there. Um, Um, but sometimes it's hard to connect the reality of of what's out there to the disinformation about it. And in that case, I kind of wanted to ask you, as someone who's striving to educate the public about the real risks, but also the real advantages. How do narratives in popular media distort public understanding of crypto? And is there any way to manage the misinformation or media distortions?
That's a really tough one. So the best advice I can give beginners or just anyone is really to identifying sources that they trust,
Mm-hmm.
and double checking. And I'm not going to mention any company that I use, but there are a specific well-known sources. Even Wikipedia, that's a standard one, right? That everybody
Mm-hmm.
uses. Um, that they could trust so they can go confirm specific information. I would say if anyone comes to you and they're saying, oh, you should invest in this coin or that coin, you
Mhm.
should ask for where's the white paper, who are the actual investors of this
Mhm.
project, right? What is the history behind it? Before you just invest because a friend invested or a family member. I mean, there
Mhm.
are so many scams. I don't know if you heard about big butchering scams where
Mhm.
scammers are actually, and a lot of them are from other countries. They're just finding people online or on social media or just texting people on the phone and befriending them and becoming friends with them. And then they take advantage of that friendship and they make them believe them. And then they said, whoa, I make so much money with this cryptocurrency that my cousin told me about, for instance, right? Oh, you
Mhm.
should open an account here. And when the person goes, they actually legitimate, right? They invest, let's say, $1,000, and then it triples and it becomes, $3,000, and they make some money. And then they get pushed to continue investing, and they sometimes drain their bank accounts or the retirement funds and invest 20, 50K, whatever they have available, because they know this is their future, right? And
Mhm.
sometimes it's a romance where they say, okay, I'm going to come and meet you in person, and we're going to get together. They make themselves trustworthy, right? And then when the person comes back to try to withdraw the funds, the company's no longer there. The website doesn't work, right? So they lose
Mhm.
everything. So you can't just trust people, right? So you have to make sure you go to the right sources to do your research. You can follow specific organizations on LinkedIn. There are specific crypto analysis companies that really help. And if you just need to put the name of the cryptocurrency, and it'll give you the background, the history. You can educate yourself. I believe that YouTube is a great source.
Mhm.
Um, to take specific free um, classes or courses and better understand cryptocurrency. And then those very well-known large exchanges or cryptocurrency companies, they usually have a lot of information on their main website that can help you understand the different digital assets that come. But definitely misinformation is out there. I wouldn't believe anything anyone says, on those social media platforms, or just because people hear about things. It's really doing your own research. And once you actually have an account, don't share your wallet. A lot
Mhm.
of people are being targeted on the phone. I get targeted all the time where people text me and they say, whoa, somebody tried to log into your account, or I'm calling you from the help desk.
Mhm.
Um, we had a security issue. We need to log into your account. Somebody tried to withdraw this amount of funds from your account. And a lot of times it's the same exchanges. Somehow they figure out, or they just get lucky and they know which exchanges I'm using or which
Mhm.
crypto companies. And a lot of people have gotten scammed. I mean, just this year alone, I think there's an estimated $2.1 billion lost in crypto assets due to scams and attacks. So it's really a big issue. And I think that's where we need more education.
Mhm.
Um, I think awareness is great.
So you mentioned the pig butchering scam as one of the schemes that's become popular and targets the vulnerable people. Are there
Mhm.
any other types of scams that the public should be more aware of?
Yeah, of course. So social engineering is a large, I mean, it's a lot of people are being targeted via email,
Mm-hmm.
via text messages, via social media. And a more recent one, really notorious one, is where a specific um, group called Lazarus Group, which is a North Korea state-backed organization.
Mm-hmm.
It's actually targeting developers. So they somehow go to LinkedIn and figure out that someone wants a specific. I've been targeted that way too, to be honest. Um, but luckily, because I work in compliance, I haven't been hacked, but it can happen to any of us. So they reach out to you with this great job offer, and they say, okay, we could potentially collaborate. I have this opportunity. Um, and they have you look at a file, they have you download it, they say, look at this project. And then what it's doing is, once you open the file, it is actually targeting smart contracts on Ethereum. So this one attack in both Ethereum and Binance. Binance is one of the largest crypto, exchanges, and Ethereum is obviously the network
Mm-hmm.
that actually powers decentralized finance. So just in 2025 alone, it's estimated Google Analytics actually put out some numbers. They say that $2 billion in crypto assets have been um, stolen by this organization. And what they do is, so they actually come in and then they update the smart contracts. Why is this critical? Because the way that smart contracts are designed, when you create them, you can't really change them or alter them. So we're having to be reactive, the industry, and identify which crypto wallet, like say wallet, UNC 542 belongs to Lazarus, which is tied to, a state
Mm-hmm.
bank, North Korea's government, right? So we're going to sanction them, and then we won't allow them to actually catch these funds. But it's too late at that point because already they have stolen $2 billion, and then they could create other accounts, right?
Mm-hmm.
So it's really awareness. We need to make sure that folks that are supporting the crypto platforms are aware of this risk. And it's just getting more and more sophisticated. So it's tough to keep on top of it. This is, financial crimes organizations that are out there looking for ways to hack the systems and steal money. So that's a serious one.
So, in that respect, how do you evaluate the current US regulatory framework, especially the division that we've been seeing between the SEC, the CFTC, Treasury, and of course the White House?
I'm sorry, can you repeat the beginning of the question? I didn't hear you properly.
Um, i- in that sense, how do you evaluate the current US regulatory framework around crypto governance, especially the divisions in the approaches between the SEC, CFTC, Treasury, the White House, and the recent also deregulation efforts by the current administration?
Yes. So I think when it comes to regulations and the current landscape for risks and just overall where we are with the crypto market and blockchain technology, regulations really have a long way to go. I
Mm-hmm.
think regulators should focus more on um, consumer protection, but they need to be more clear on the rules. For instance, the Trevor rule, um, anti-money laundering rules, and just guidelines, just like we have for standard
Mm-hmm.
um, organizations in other markets to protect information. They apply obviously as well because these are, technical infrastructures, but this is way more complex because of the way that smart contracts are designed, because of the lack of awareness and knowledge of cryptocurrency. Regulators, I envision then really collaborating more globally because blockchain is global. So if I
Mhm.
focus more on our regulation here in the US and saying, okay, well, I'm going to protect consumers, this is going to be specific to stable coins. It might not align with a European regulation
Mhm.
and whatever they do on their side. So they need to be more alignment. They need to focus on activities, like I mentioned before. I don't think the regulations are where they need to be yet, but I do see progress.
Mhm.
I think there's need to be wider collaboration. And there's need to be more focus on consumer protection and fraud in more detail because it's very high level a lot of times the regulations that they put out because I think the lack of understanding on the
Mm.
how the technology really works and
Mhm.
how it impacts consumers and infrastructure, they make it so high level. So when it comes to translating them and making sense of them, creating those frameworks that I usually work with, we're left with a lot of questions. Um, which which if they actually, let's say, created a sandbox and really understand the environment and they sat together with these development teams creating these projects from scratch, then they'll be in a better position to better regulate the all the crypto products
Mm.
and the environment, right? It shouldn't be by actually asset, like I've mentioned, it should be by activity. So there's got to be a defined framework that each of them follow to say, okay, well, these are based on the ecosystem and what decentralized finance does. Here are all the different pearls they offer. Here are all the activities. We need to make sure that we provide clear guidelines for these activities. And then maybe some sort of in my opinion, a certification for new projects that are coming in,
Mhm.
right? Not everything aligns to, let's say, the Securities Exchange Commission, but there are other regulators out there that do consumer protection that definitely should
Mhm.
be concerned because I think it's a little bit too much happening at the same time. The innovation is way faster than
Mhm.
um, the regulatory support and what they can actually catch up with. So it's quite tough for them too, right?
Sure.
Because innovation is moving so fast, it's even hard for them to understand what they're regulating,
Mm.
right? So
So,
that's where the challenge is.
is there any visible impact from the recent lifting of some regulatory laws by the Trump administration, or is it too early to tell?
So can you repeat that again? I think it's a little loud here, so I'm having a hard time hearing you.
Is there any visible impact from the recent lifting of some crypto regulations by the Trump administration, or is it too early to tell?
Yeah, so I think we need to see how that's gonna play
Hmm.
out. There is being some obviously um obviously looking at consumer protection, what the regulations and to do some of the most recent ones, but there's also some major concerns that have been raised by folks in the industry.
Hmm.
Um, so I think we need to really see how this is going to play out.
So what
um,
sort of concerns are you hearing about?
so obviously through my research, and I'm not as close as some of the you know changes by the current administration, but there is assumptions being made. There is concerns about, for instance, the Genius Act is
Hmm.
one of them,
Hmm.
which is a regulation to it aims to have more oversight of guardrails over stable coins
Hmm.
to consumers, so consumer protection type of regulation.
Hmm.
When you're looking at um, who actually has um, the ability to trace stable coins in traditional, environments. Usually we have to look at politically exposed individuals and make sure that
Mhm.
um, they're actually, that whole process with know your customer and what they can do when it comes to the organizations is tightly closed, and some of them are sanctioned from actually performing certain type of transactions. So it wasn't clear, according to some of the research that I did and some of the concerns that were raised, that government um, uh, folks working in the government would actually have the same scrutiny as, you know, other folks would, right? So there's concerns about that. And I think the regulation needs to be further explained to really see how
Mhm.
it ties to, the real life scenarios. But I think, this is something that we'll see play out in the near future and see the impact.
In the meantime, there are all sorts of questions about what role crypto and blockchain will play in the current national security landscape and the great power competition with China. Is there, there was a little while ago there was a book that was put out and restricted by somebody in the U.S. military, which talked about cryptocurrency as a national security application and essentially the race by various competing powers to um, the secure understanding of national security data that could be first of all um, that could be encrypted by blockchain technology on the one hand, and on the other hand, how crypto could be used as a strategic national security asset. The book was ultimately restricted by the Pentagon because this unique concept they were afraid of being disseminated and other powers catching on. But what do you make of this whole concept or discussion, and do you see that really playing a major role, or is it something that's very theoretical and not currently much applied?
Okay, so great power of competition when it
Mm-hmm,
comes to blockchain.
mm-hmm,
So we're looking at cryptocurrency and blockchain overall as a geopolitical asset rather than a, a cryptocurrency. So it's when we're looking at countries specifically, I'm thinking of US and China that are competing for control over the future of um, digital financial infrastructure.
mm-hmm,
So they want to be the first ones to shape the standards. They want to be the first ones to have competitive advantage, maybe offer infrastructure to more less
mm-hmm,
developed country. So the way I see it is that blockchain is not just a technology anymore.
mm-hmm,
Um, like you mentioned, so it's a strategic infrastructure, it's cross-border,
mm-hmm,
payments being offered at a more effective way and less costly. Um, it helps with national security, obviously,
mm-hmm,
supply chain, and more secure communications and data integrity, like I mentioned before.
mm-hmm,
Um, and now it's being used for, let's say, government and military systems, right? So
mm-hmm,
voting machines to protect those. It's the same way that we could protect information in the military.
mm-hmm,
So this is a very interesting topic because if we look at those two competing nations, so for instance, China, what is their approach? So they're moving more aggressively towards really um, creating infrastructure. And then they actually um, released their really strong digital yuan, like cryptocurrency, is the national by the national bank, right?
Mm-hmm.
Um, they're looking to eventually, in the future, based on my research and what I see, where they're moving towards, maybe providing more access and be independent from the US. So, so this infrastructure right now, they depend on the SWIFT system, they depend on the dollar. They want to be able to lead in that space where they can, basically the global payment space,
Mm-hmm.
reduce reliance on the US. Um, Meanwhile, in the US, is focusing more on the private sector, innovation. They want to lead in cybersecurity, in analytics, but um, their regulations are fragmented, right? And that's actually it puts us at a disadvantage, where we lose some competitive edge.
Mm-hmm.
Uh, so it's quite interesting. Ultimately, um, we're looking at the future of rewarded payments, like I mentioned, so security, and all of
Mm-hmm.
this is going to bring stability to each of the countries and more economic powered, right?
Mm-hmm.
A global balance. But obviously, whoever ends up,
On top,
on top is going to have a greater advantage.
is
So
there
just a competition. And then by default, blockchain is built on you know, on the principle that you would have competition because it's more inclusive. Like even to secure and
Mhm,
create new blocks, you have people competing um, to basically validate transactions. So the
mhm.
whole thing is staged in such a way that there will be competition. But right now, I feel like the US and China are kind of really competing for that space.
And is either of them really taking the lead in it, or is it hard to tell at this point?
It's tough. It's tough because obviously you do want those analytics are great because I feel like you don't even know if you're doing a good job, especially in technology, if
Mm-hmm.
you don't have the matrix of analytics to prove it. And I can
Mm-hmm.
tell you, I haven't been focusing so much on like, the Asian market, obviously when it comes to risk and things of that nature, but they are making a
Mm-hmm.
lot of innovative advancements, and everything is moving so fast. So I think it's we still yet to tell.
Mm-hmm.
Uh, but I do feel that they have some advantage when it comes to infrastructure, which is critical because there's going to be all these third world countries that I want to catch up, right? When
Mm-hmm.
blockchain is really more established, and they could take advantage of that infrastructure that China is offering, especially Asian and even like some other countries in Latin America, even closer to the US.
And to that extent, do you see the US approaching crypto more or as an opportunity or more as a national security vulnerability? I don't mean the political side of things, the administration. I'm talking more about the security agencies, regulators, and so forth.
I think I've seen a shift in the last 2 years.
Mm-hmm.
Um, Initially, even financial institutions, which are where I was more used to supporting, like large banks, right? Like those,
Mm-hmm.
JP Morgan Chase and banks at that level, global financial institutions, they were very reluctant and opposed to,
Mm-hmm.
adopting cryptocurrency. And now they have no choice because I feel
Mm-hmm.
like that blockchain cryptocurrency is not going away.
Mm-hmm.
um, it's going to be here. And if we don't, whether we're organization or individuals, we don't understand the technology and try to offer products to individuals,
Mm-hmm.
we're going to lose competitive advantage and fall behind. So now I'm dealing with supporting some large banking institutions, and they have no choice. Although we don't have a government um, supported cryptocurrency, like a national coin. So that's an advantage that China has. They have one
Mhm.
that's very strong, right? We we still are having all these institutions adapting, and they're starting to offer crypto assets products. And if you look at all the many thousands of um, big tech companies, they all have
Mhm.
crypto assets in their wallet. So it's becoming more and more common now. And for that reason, I feel that regulators are more, especially in the US, they're more open. They're more open to understanding the technology. They're looking at what they have to offer. I think initially, when I first started researching this topic, they were very reluctant
Mhm.
and more looking at more like, okay, this is just fraud, it's speculation. But I think a lot of these projects that are being piloted now are demonstrating that there is a lot of value in blockchain. They see it more than just, a medium of exchange for digital currency.
So is it fair to say that cryptocurrency is living up to its initial purpose of democratizing finance? Or is it and that people have overcome all the scandals and the controversies? Or is it still too early to tell and could still be
I,
disrupted?
I think it has potential, but it's definitely not there, and it has a
Mm-hmm.
long way to go. But if you look at the history, for instance, of fake currency, it took thousands of years for us to get where we are. So we're the very infancy stages.
Mm-hmm.
I honestly, and in my personal opinion, and I didn't include this in my book because it's for beginners, but
Mm-hmm.
I want people to come to their own realization. I don't feel, at least at this point, and I could change my mind later based on how we evolve, the financial markets and crypto markets. I honestly, and there have been some pilots. I don't feel that we should 100% replace fake currency with, let's say, Bitcoin or I think this it's risky to do. We shouldn't
Mm-hmm.
be truly digital. I think that the technology and cryptocurrency trading has a lot of potential, provided that it's regulated properly, focusing on consumer protection rather than speculation, and it could really systemically impact the financial market. So we need to be aware of that, and the guardrails need to be put in place. Um, and I think it should be an alternative, like if not all, but a lot of the organizations or retailers out there could, um, they are now doing it. You can buy a hamburger you know, um, with your cryptocurrency from your phone, right? But I
Mm-hmm.
don't think that we should go just to, at least that's
Mm-hmm.
my traditional opinion, and say, okay, well, in 5 years, we're going to replace, fake currencies all over the world, or at least in the US, and just make digital currency. I don't think that would that's and I have many different reasons where we probably need a different meeting for that one, but I don't think that's the way that we should go.
Interestingly enough, El Salvador tried to complement the currencies it used, meaning the dollar and also its own currency, with Bitcoin for a while, and recently quietly moved away from having Bitcoin as its one of its official currencies. What does that mean? Does it mean that people were simply not interested in using it as much as expected because of lack of education or perception of risk? Is it something? Is it something that indicates the direction where it's all going, or is it something because it's a relatively small country, experimented for a while that particular venture did not work out, the idea that crypto is actually being more widely utilized and normalized is actually a success story, despite the seeming setback?
I think it's an experiment, and I
Mhm.
think it has its pros and cons.
Mhm.
Um, I just find it difficult for certain, because the whole concept and how it was solely was inclusivity. Okay,
Mhm.
um, it's this is not going away, so that's true. So let's make Bitcoin the national currency, coupled with the US dollar.
Mhm.
I think lack of education is probably a big factor.
Mhm.
I just feel that in certain communities, people are not even that technical using the cell phone, right? Like I
Mhm.
think about
Mhm.
my mother, like she can hardly send a text message. She's her generation, right? It's not
Mhm.
like us that grew up in like the 90s and 2000s. So people are, I think some of these communities will be left behind and they would struggle.
Mhm.
So there was I can't really like take a side on this because there was
Mhm.
I think it was a good pilot,
Mhm.
but there's pros and cons, right? So
Mhm.
what I think, like when you are impacting the economy of a whole country, you have to really assess whether something is really working or not and make decisions. And if it's not going to
Mhm.
work, get out of it. Um, but the adoption when it comes to all the businesses offering this product, there's technology behind it, there's testing. It's
Mhm.
quite complex. And if you're not ready and you're not preparing for this, like let's say years in advance, it's very
Mhm.
tough at once just say, okay, I'm adapting it. I
Mhm.
think it could work well when you say, okay, but there's a number of organizations that are supporting this project, and then there should be experiment, but it shouldn't be the whole country right away, all at once, right?
Mhm.
But I think it definitely a good it has some lessons to be learned, like the whole experiment, and then it's telling a lot about how this could play out
Mhm.
in
Well, I certainly think that there is a very interesting future ahead of us in terms of that, and I certainly think that um, that in the future we will hopefully see some regulatory clarity and try to try to not fall behind the rest of the international community in that endeavor, but um. Uh, I do think that it's good to try to think more strategically. And, I want to end with a final question. Do you believe there is kind of a longer term geopolitical national strategy concerning cryptocurrency emerging in the US? Or sort of consensus, or is it something that is driven entirely mostly by private interests and individual stakeholders in the administration rather than by sort of this national dialogue on the subject?
yeah, so I think it's um that's a very good question. Currently, if you're looking at the news and what's happening and all the speculation, it appears to be driven by private interests and those that actually got into the crypto market early. They know it better, they can afford to lose. But I also see at the same time global large organizations making an effort to educate
Mm-hmm,
communities and work, making an effort to work with regulators to really understand, and support changes that are coming in to have a very strategy. I don't think we have a robust strategy. I think some other um, jurisdictions, countries, regions,
mm-hmm,
probably a little more advanced. And I think that's mainly because well, different reasons, but also because they're a little also more advanced in cohesive regulation to, to they accepted that this technology is evolving. Um, there is a large group of supporters in, in the market for it, and it's not going away. So they're working together with these communities to regulate it properly. But they also have their disadvantages, and then work they have to do to clarify the guidelines. But if I was to have this discussion, let's say 4 years ago, 3 years ago,
Mm-hmm.
I say we're in a much better position now than we were before. So there is movement towards more cohesive frameworks and regulations. I don't know if the US were focusing more on,
Mm-hmm.
um, like you mentioned, um, making those group of people that want to make money and they want to um, hype. I think in the future, we should focus more on the skeptics, the folks that don't
Mm-hmm.
understand cryptocurrency, and make it more inclusive and
Mm-hmm.
have better, more clear guidelines to follow for those. Because you also can just say, okay, we're going to blame those project people that just come up with all this innovation and they don't think
Mm-hmm.
about it. They need guidance too, right? So
Sure, of
I
course.
see both sides of the coin.
Well, thank you so much. It was really eye-opening and in many ways hopefully inspiring to our listeners to read up more. Certainly read your book, follow your channel, and actually start out with more of curiosity, hopefully, than fear, and just be able to make independent and well supported educated decisions rather than either fall for scams or miss out on important opportunities. And thank you so much for joining us today and for your time. Please do keep us posted when your book is coming out.
Sure.
And for everyone watching, this was the Washington Outsider Report on the Coalition Radio. We'll be back next week, Tuesday night, as always, with our next program. Thank you for joining us, and thanks for everyone who watched this program today.
Thanks for having me. Thank you.
Thanks.